Ladies and gentlemen, welcome in. My name is Blake Dirks, and if you don't know me, I'm moderator here at the Trading Pub, and I'm covering for Raleigh today while he is out. So, thank you so much for being here and spending some time with us on this lovely Black Friday. I promise we'll make it worth your while. So, stick around. Roger will be on in just a couple minutes. Take care, folks. We'll see you soon. All right, folks, welcome in on this Black Friday to another VIP room. We got Roger with us.
Hey everybody. Hey Blake, how are you?
I'm doing fantastic. I'm recovering from my food coma from yesterday. So, all
The
right, folks, welcome in.
the old
This
food
Black
coma, huh?
Friday. Oh yeah, we had two Thanksgivings, so I had to like pace myself at each one, but I didn't pace myself at all. So I just ended up having two Thanksgiving dinners. Recovering from my food coma from yesterday. So, oh, is that me?
No, no, it's I had another screen on YouTube and it was echoing us. I just turned it off.
There we go. I
That's
was like,
my that's on me. Sorry about that, bud.
no, you're good. I thought I had your stream open in
No,
the
no, no, no,
background.
no, no. No, that was me. That was me being that's me. Sorry. Please continue. I want to hear about this.
No, we had two Thanksgivings, and I had a bunch of turkey at one, and then we had just different appetizers. So we had really good green bean casserole. My mother-in-law makes some really good sweet potato casserole, and she uses marshmallows on the top.
Ooh,
So,
very nice.
but yeah, it was really good. What about you? What did you anything special for Thanksgiving?
Yeah,
You
actually,
say?
actually, well, it was a really special Thanksgiving for me because I had my daughter and my son. My daughter lives in Tampa. She goes to school in Tampa. My son moved back here and he's going to Australia to study veterinarian care. And he's going to be a vet. And he's going to be a kangaroo doctor. She's going to go to law school. And this is going to be the last time I'm going to see both of them together in the same room. Oh, recording in progress in probably the next 3 to 4 years. So it was really important for me. Let me just turn this light on real quick.
I had to do that too. Sure, I got
There
my
we go.
desk light going.
There we go. Yeah, so it was really important for me because I'm a big family guy. I mean, the markets and the family's really all I mean that's just like my biggest focus in life. I'm pretty sure everybody and Clyde and my animals are family.
Oh
So
yeah.
yeah, they are family. I was really big on that. Let me just turn this thing on real quick. And we have Mia here, by the way, joining us. I don't know if you guys could see her. She's right there. Yeah, you could
Oh,
see
we
her.
got Mia.
Yeah, she's right here. Hi, sweetie. Hi. Yeah, she's right there. She's hanging out with us. So we got a
Nice.
full house. So what I wanted to say was so it was a really important night for me because I think this is the first well, I don't remember the last time we were all together. So I got a chance to
Wow.
meet her. I got a chance to meet her new boyfriend. He was actually a really nice guy, and my son's been with the same girl now for almost 6 years.
Oh
They're like
wow.
this. Yeah, yeah, they're really tight. So we had a really fun family. My mom was there. My in-laws were there.
Oh
It was
good.
it was great. We had it, and I just found out yesterday morning that my daughter got 170 on the LSAT, which puts her 96th percentile. So she's applying to
Awesome.
all the Ivy League schools. So I had like the best. I had probably the best day I've had. I honestly, it's the best day I can remember. I'm very high from this whole thing.
That's right.
Doesn't take it's not about for me. It's not making money. That I don't get anything from that. But this stuff really gets me going. So I'm very happy about this. I'm very happy about that. Yeah, Matthew. She applied. I mean, she was applying to I think it's top. It's called Ivy League, and then they have top 14 or something like that. So she's now applying to half of the Ivy League schools, not just the top schools, but she's literally applying to half of the Ivy League schools because she's in that ballpark. She's got a 3.9 GPA, 170 on the LSAT,
That's
96th
good.
percentile. I took the LSAT 30 years ago. No, 35 years ago, something like that. And I got 167. She got 170. So she got daddy beat, which is really good. I'm so happy about that. There's nothing happier. Blake, I'm assuming you have no kids yet?
Well, it's interesting you asked that. So my wife is actually
Oh,
pregnant right now.
well, there we go.
So the first one, it's a girl. She's on her way. She's gonna be here in February.
Oh, that's fantastic. I
So
hope I hope I wasn't giving anything away. I had no idea.
no,
So
I no, it's perfect that you asked. I was like,
perfect. Perfect.
actually, we've got
Perfect.
one on the way. She's cooking in the oven.
Excellent, excellent, excellent. Very good. So, folks, I got something really special for you guys today. But I figured before I spill the beans, I'm going to go ahead and share my screen. Can you
Please.
give me the screen, Blake, real quick? There we go.
I can.
I want to share my screen, so I give you my top stocks. I definitely want to give you my top stocks. And full disclosure, I am long right now, personally, I'm long right now, Tiva, and I am also long, what am I long? sometimes I don't even know what I'm long. I have to check my. I've got so many things that I'm looking at. Oh God, where is it? One
Did you
second.
see the futures market was shut down
I
for like
did. I
12
did.
hours?
And a couple of folks asked me, and I'm long personally Tiva right now and Rivian, and I didn't post it because they're both meant to be short-term day trades, so I didn't have time to post. But I'm actually long this stock from somewhere right here, and I'm long this stock right here from pretty much the price where it is right now. For anybody who's interested, I figured since you guys are here, but yeah, I did, and a few folks asked me how often that happens. And I will tell you something, that's probably happened 4 or 5 times in the last 30 years. That does
Yep.
not happen. It's not a common occurrence at all.
Nope.
Matter of fact, I don't remember the last time it happened. I know it happened. I
20
remember going back.
2019.
Say that again.
2019
2019. Okay,
is
okay.
the
So
last time it happened.
really, so yeah, yeah, yeah. As I said, from my entire existence trading the markets, I can remember that it happened 5 times or less. So it's very, very, very
It's rare.
it's very rare. Yeah, 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 yeah. It's very, very rare. It's not something that you should be afraid of or think that there's something wrong or it's just one of those rare, rare things.
Yep.
Matter of fact, I would say, if you want to really get into it, the New York Stock Exchange has probably been halted more times than the Chicago Mercantile.
Yeah.
And remember something else, up till about 2018 or whenever they closed, remember it was a pit trading too. So it was kind of hard. It was kind of hard for that to happen. There was no alert on YouTube. Sorry to hear that. We are live on YouTube. Let me just double check, but I'm
Yeah.
pretty sure we are. Yeah, we are live on YouTube. Yeah. Anyways, so let me show you the stocks that I'm looking at, and then I want to talk about something really important for a few minutes. Hopefully, it'll sink in, and then I want to get on with the holiday surprise. Got perfect score SAT. Yeah, this is the LSAT. It's yeah. I'm sure they are, Greg. I'm sure they are. That's what I always say. Skip generation, right? That's exactly what I always say. All
Uh,
right, so short side first. Short side, I only have two stocks. I have Zscaler. I gave this as a bonus trade in the pit on Tuesday, and folks could have taken profit either on Thursday, I mean on Tuesday, or they could have taken profit today. Right here, here's your exit right here. Everything is always time stamped, so there's no here, right there. If you ate too much turkey and in a food coma and forgot to get out of it with a profit on Wednesday, here's your shot again. Actually, Tuesday. I got to change that to Tuesday. Tuesday. Wait a minute. Thanksgiving. No, Wednesday. I was right. It was Wednesday. Okay, we're good. We're good. We're good. All right. And so you guys had your notice, but I still like it, which is why I'm adding it to my short list. I still like it. I probably shorted right here at the VWAP. And CBZ. I don't really know what they do, and they're pretty choppy, but they're breaking down pretty darn well. Okay. Hey, Bill. Hey, Brendan, Jeff, Naples fan, Genevieve, Richard, Yuri, Steve, Kevin on YouTube. Good morning. Good morning. Richard says 60% profit on 3/4 of position, holding a fourth. Good. Where did you get that trade from, Richie? All right. And let me just say hello to everybody here. We got Claude, Tim, we got Willis, we got Jason, Eduardo, Kai, Matt, Ivano, Tommy, we got Omar. Hey, Omar, how are you? Candy. We got FMB. We got Michael. We got Walt, Hopium Addict, Kirk, Richie. We got Bob. We got Herbert. We got Matthew, Edward. Got a lot of people here. Julio, Murray. Hey, Murray. Hopium Addict, Gitano, Kenneth, William, Joel, Michael, Sandra, Jeanette, Penny, how are you guys? Hello, everybody. Hello. Hello, hello, hello. We're not going to tell Raleigh that I'm looking at the chat, okay? He's off. We're on holiday. Hello, everybody. Good to see everybody. All right. So let me go ahead and now give you my longs that I like. And again, it's not a long list. I like Rivian. I still like Rivian quite a bit. I like General Motors here. It's got a nice trend. I like Tan. That looks great. That really looks fantastic. Okay. Really looks fantastic. Tiva, we already talked about that. Probably for a day trade only. I wouldn't swing this too high up. Intel looks amazing. Probably again for a day trade, not a swing trade. CSIQ, that looks great for a swing trade. JP Morgan, looks good for a swing and a day trade. Actually, still has some upside. VLO looks very nice. And NEE, I like that one. And this one's a little controversial. Cisco, and I'll tell you why it's controversial because I like the stock and I like what I'm seeing here. And the problem here is that if it peters out, it's going to look just like these bars. So I'm going to make an assumption that Cisco is going to break out and keep going. But honestly, I wouldn't be doing it just yet. I would actually set an alert right here somewhere. And I'd like to see how, yeah, 1 week is fine. But this is chopped. You'll get it. You can get it's moving right now really well. This is very nice, and it's got good volume today, right here. So this is looking really good. But I'm telling you, if you buy before here, you'll get a better price, and if you win, it's going to be good. But you can be chopped here for the next few days. Okay. So I don't do anything with Forex and I don't do anything with Bitcoin, actual Bitcoin. That we have other guys in the pub that are excellent with that. It's just not my forte. I'm more on futures and stocks and options. We have, if you guys want really good info for, if you guys want really good info for Bitcoin, we have Jeffrey Turnmeyer. He's really good about that. Okay, so those are my stocks. And again, Cisco is not ready yet. This is anticipatory. This is just something this is something that I would not actually, you know what? Let me see if my assistant can help me out here. This would be a good. I had an idea for Cisco. 1 second. It's not a bad idea for a bull put spread. Here, 1 second. All right. I asked Matt, see if he can. Matthew says put a straddle at 77 last week, looking for vol. May not be such a bad idea. Currently, we're looking at Cisco right now, and honestly, I wouldn't mind putting a bull put spread right here. Let's see how good the spreads are. Oh, they're really, well, they're not bad. This is easy to work with. So if Matt comes and tells me liquidity's bad, I know he's not. He should not have a problem with a bull put spread here. Okay. Bull put spread, a bull put spread is when you want to do puts to take advantage of this just going sideways or slightly coming up. Okay. Yeah, Intel is looking good too. I was looking at Intel. The problem with Intel, it looks like JP Morgan. It's a little too much too fast. So this is a great day trading stock, but I don't know if I'd want to. I don't know if I'd want to swing trade this. I don't know if I'd want to swing trade this because it's a little too much too fast. Okay. Now, I want to talk to you guys about something. Let's see how many people we got here. Good. I want to talk to you guys about something, and this is really important. And a lot of people, and I'm really hoping that I can make a difference with this in your trading. All right. So a lot of folks believe that successful trading is about, learning the best strategy and knowing how to find the best stocks. And there's a lot of that involved. But if you were to ask somebody who's been doing this for 10, 20, 30 years successfully, there's a lot of people who've been doing it for 20 years unsuccessfully. But if you find somebody who's been doing it for 20, 30 years successfully, they will tell you all of that takes a very, very, very big second place to all of that takes insider information, hot tips, the best technical setups, all that stuff takes up a huge back seat to your relationship with the market, how you think about the market. I've seen many times, Roger, the reason we took a loss is because I'm involved. Every time I get involved, I'm like a bad luck. No, you're not. No, the market doesn't care about you. You're not that important to the market. I'm sorry to tell you. You're just not. The market doesn't care about you, okay? It doesn't care about you at all. It's not out there to get you. So your relationship and how you deal with a market is the problem. And I'm really gonna tell you what it is. And it's funny because I was watching a show yesterday. Okay. I was watching a show and it's so funny. The market is just like this show. When people get involved with the market, okay, it's like a 13-year-old trying to, find a girlfriend for the first time. It's laughable. Their mind, their all common sense goes out the window. So I was watching a couple of shows. This is what made me realize this. I can give you guys a really good example. So I was watching a show. I was watching Happy Days. Fonzie, how he was really cool and how all the girls gravitated towards him and he acted like he didn't care. That's how a professional trader looks at the market. Very, very steady, no ups and downs, no hands getting cold or hot, no excitement when you win money, no downside when it's execution. You're just executing. You're following a process. When a beginner follows a market, it's like a guy who's never seen a pretty girl in his life. It's like everything goes out the window. Everything goes out the window, right? Anyways, I could tell you some bigger ironies in life, David. I could tell you some ironies that'll blow your mind away. Anyways, the irony is, yeah. So Hollywood is something, right? Like Chili Pepper said, Hollywood was made in a basement, right? Anyways, so that's funny. So your relationship, your understanding with the market is so bad that it's almost like you could see it coming. Like you could see a 14-year-old seeing a really pretty girl, and you know exactly what they're going to do next. It's obvious. Yes, he's been married, happily married guy, but yes, Jason says one of the biggest things I've learned is to quiet my mind. Now ask Omar, who's now passing $6 million. How important would you say is this, Omar, to the game? I would say it's 80-20, maybe 90-10. Hey, Catherine, how are you? So about 2 years ago, I asked you guys if anybody here, Omar says 90%. I'm not lying, folks. And this is why I always say most of you are trying to figure out the 10% instead of focusing on the 90%. Patience, FOMO, not having patience. That's like 50% right there. You treat the market like this is the best setup and it's never going to come back to you. The market will always be here. The market's not going anywhere. Or thinking that a certain stock is out to get you and you're not trading it, or thinking that you're cursed, or that you've been that somebody that somebody's going to turn this into a bad luck for you. It doesn't work that way. It doesn't work. There's no conspiracy theories. Nobody's out to get you. But now here is the biggest problem. So when I asked you guys, we did a survey, and when I asked you guys initially, how many of you guys think you have psychological issues relating to trading? Almost virtually everybody said, nope, no, we have none. And then when I started explaining these problems and saying, hey, Hey, do you ever do this? Oh, yeah, I do this all the time. Do you ever do this? Oh, yeah, that's me. Do you ever do this and then that and then this? Oh, how did you know? And little by little, if I was to do the survey now, people would be like, yeah, yeah, yeah. I definitely have psychological 100%. It's impossible for me not to. Think they know when I place it, and then it goes against me. Marty says mine is when I place a trade. I think they know when I. That's the funniest thing in the world. Of course. Hell yeah, yeah. If you guys don't think you have psychological issues, you probably have the most. Richard says, you see my comments all morning calm, waiting for what I want from the market, trading like a sniper. Last year I had an M16. Yes, you did. You were like, and I was like, take it easy. Don't let it come to you. Be patient. It gets better with time. The problem is most people conclude that it's undoable before they run out of that time. Before that time comes, that's the problem. So I'm going to tell you guys, okay? I'm going to tell you guys, your problems are not finding an edge in the market. Let me explain. If you didn't have an edge in the market, you'd be just P&Ling zero all the time, right? If you had good psychology, but no edge in the market, you wouldn't be losing or gaining any money. But if you're losing money and you have an edge, right? So here's something. So let me start off with this. The biggest issue is it's not your fault. And I'm not trying to sell you anything right now. I really mean it. It's not your fault. The worse you are with trading psychology, the better you are dealing with everyday life. Okay? Life prepares you. Life prepares you to position yourself in a place of certainty. Life positions you to think in terms of exactness, not to be iffy washy. Life prepares you for that. So what you're really doing is what I'm really telling you to do is you have to completely turn your psychological thinking inside and out. Now, do you guys know how hard that is to do? Think about it for a minute. You know how hard that is to do? It's next to impossible. It's next to impossible. It's hard. It's hard. It's hard. It's as hard as kicking an alcohol It's hard. It's hard because it's deep inside you. Okay. And if you guys think that I'm talking about some nonsense right now, or this is I'm not. I'm being really serious with you. The hardest thing to do, we are programmed to do yes, you are programmed to lose money. You are programmed to hope when you should be fearful, and fear when you are pre-programmed. Your DNA is pre-programmed to lose money in the markets because when you are psychologically fearing, you should be hopeful. And when you're hopeful, you should be fearing. That's your edge, Scampy, but you still have to, people have bad days. People don't think clearly. People are not stable every day. People have headaches. People get sick. And if you guys think that, the way I do it is this. The way I do it is this. I remind myself that something has to pay for those losers. That's how I do it. My best reminder to remember all this is something has to pay for. Everybody has a different trigger, but my reminder is something has to pay for these. Every time I want to make a bad decision, I remind myself that something has to pay for the losing trades. That's how I do it. It's like a reminder I have for myself because you see, here's the thing. You will never, ever, ever be able to get these thoughts out of your head, these crazy, stupid thoughts that jeopardize you. You will never, ever be able to get them out of your head. What you will be able to do is control them. And with time, they become smaller and easier to resist. But you can't turn them off. You can't control what you're thinking. You can only control how you behave in relationship to what you are thinking. Okay? I hope you guys are taking some notes here. Zen says, I think the mental part of it all is the hardest. Zen, me and Omar just told you that it's 90%. 90 to 10. 10 edge, 90% psychological. Richard Dennis said, I can give my edge, I can give my rules in the Wall Street Journal or in the New York Times, and nobody would follow them. Edge, 10%. What's between your ears, 90%. Okay. So let me tell you a good way. Let me tell you a great way to find out whether your mind is screwing with you. That's right, Greg. So let me tell you a good way to test yourself. All right. Of course, Michael. Of course. Thank you. I appreciate that. So let me just give you guys some pointers. Okay. Let me give you some pointers. Truth fiction is very hard. Yeah, I love your words of wisdom. So hard to ignore. Truth fiction is very, yeah, I don't know anything about that, but I'm telling you, 90% is the edge. 90% is, I mean, the psychological. So, I wanted what was it? Oh yeah. So let me share with you a good trick that you could use to see if you're jeopardizing yourself. Okay. Take a look at trades that you guys pick yourself. Okay. Go back to those trades and look at those trades and take a look at where you took profit in comparison to how far the stock could have gotten up past you taking profit. See where you're taking your losses and see how far the stock, basically, see what would have happened if you would have done something differently instead of what you did based on your own decision. Okay? So what you want to do is you want to do your own do a series of your own trades and ask yourself, go back in time, go to like look at the last 30, 40 trades and ask yourself, okay, well, of course you do, Jason, because you understand that that's what you do to improve. Um, that's not the best way to do it either, Rainbow. It's a good way to do it partial. You could take partial profits at 30, but let price action dictate. So, so the best way to do it is and by the way, don't pick one market environment because what happened is this: you'll go back, for example, during a period when the market ran up like a beast, and you'll get out and you look at your last 10 trades and you're like, oh man, I left a lot of money on the table. No, 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 no. What you do is you go and you look. What you do is you go and you look, okay? Different random trades, random over the last 3 years, take 10 trades. Take your losers, take your winners, paper trade, and see if you're getting out, if you're in tune with the psychology of the market. And I'm not really concerned about how much money you've made or lost in this exercise. I'm concerned with how well you're picking objective, how objective your mind is being with your decision making process. Are you getting stopped out at the right time, or are you getting stopped out always prematurely? I want you guys to look at your own. Take a look at my watch list stocks that you guys have been trading. It's a good way to do it. Now, that'll convince you have a problem. Okay, everybody does. It's just a degree. Um, so now, how do you solve this problem? Well, the first thing you do, you have to realize you have it. If you don't realize you have this problem, if you think your mental, if you think that you're mentally in a good trading place, um, look at your account, and if you're not a professional trader, you're probably not. Okay, okay. You got to admit you have a problem. Okay, that's the first step. If you can't admit to yourself that you're mentally screwed and you're wired completely to lose money, and you're horrific at this naturally, then you're either lying to yourself, right? You're either completely just lying to yourself, or you're delusional, lying to yourself, or you might have been doing this for a couple of years now, so you understand. There you go, Scotty. Now we're talking. That's what I'm talking about. We are the worst. Absolutely, Cyrus. 1,000%. 1,000%. That's what I'm saying. We're naturally wired to lose money. When we should be hoping, we become really fearful And when we become fearful, we should be hoping. We're wired completely differently. When we're about to take a loss, we're hoping it'll come back. And when we have a little profit, we're fearful it's going to go away. Instead of and I mean, I'm just giving you like 1/10 of a little flavor of it right now, but it's just and then a lot of you get fearful premature on your stops, and you get out too early on your stops. Or I remember talking to Bob over a year ago, and I remember Bob telling me that his problem is he stays in winners too long. He overstays in his winners. Just as it's there, Bob. How long ago did you tell me that? Like a couple of years ago, right? And how did I remember that? See, Bob, I remember. I actually remember. So again, it's a variety of problems. It's a variety of problems. So most of you will have one or the other. You will notice one or the other. You're either overstaying in losers about a year and a half ago, and I still remember him telling me that. Look at that. Um, I don't remember what I had for dinner 2 nights ago, but I remember him telling me that. So whatever it is, you don't have to tell me what it is, but whatever it is, I know, Victor. It's not something. I'm painfully aware of this. It's not something that I'm telling you based on something I read in a book 10 years ago. This is something that everybody struggles with, and if you don't struggle with it, then you're just full of it. Okay, because everybody struggles with this. So here's so let me tell you my story. Okay, let me tell you a quick little story to share with you how I was able to resolve this problem. Okay. So if you recall, when I started trading, right, shortly after I started trading, about 6 months after I started trading, I got a job as a broker. And then I opened up my own brokerage firm about 6 months after that. Uh, and and one of the cool things back then was systematized trading, day trading for the commodity, for futures market. That was very popular at that time. Okay. And my job was literally to I had a trade station, okay? I had all of these guys' systems on it, right? I had like 15 systems on it, right? And every time, ding, I traded corn, yes, but they traded SPY, corn, bonds, currencies. There was our system when I was trading with Hassett, we traded about 30 different commodities. So again, getting back to my to my story. So my job was to execute their trades. The system was already pre-made. My job was just to execute. All I did was execute. Now, how well I got paid dependent on how fast I could execute their trades. Win, lose, I didn't even look. I didn't even care. Hell, first of all, it wasn't my money. Second of all, I couldn't look at 100 people at the same time trading different systems. So what I realized was if I'm going to be really good at this, I have to create a process to be able to execute all their trades as soon as I get the alert to execute a trade. And pretty much all day long, I was executing trades robotically without any emotions. Not because I didn't care about the trades, simply because I didn't have time to think about the trades. I had to because here's what the clients would do. Commission back then was expensive. Every ticket was like $50, $40, $30, $25 each way. Okay. So what the client would do back then in the good old days is they would look at their fill, right? And they would compare their fill, their price fill, with the timestamp and if it was bad, guess who would have it? It would be me. I would get Roger. The alert came in at 6:59, and you got at six. The price was 6:59. Why am I executed at 6:58? And I had to explain it to them. So my job was So basically I was like, look, here's your timestamp. The trade came in at this time. I filled it 10 seconds later. Okay, fine. Look at the flow. So I had to explain this to them. Okay. So my point in explaining this to you is for several years, my job was to execute blindly. And after a while of doing this, I realized that, hey, why am I not treating my trades the same way? Why am I so hyper focused on my trades? So what I tried to do is I tried to make my trading not computerized or mechanical, but as mechanical as possible. Basically, I forced myself to have as few interactions with the market as possible. Now, you know where I learned that from? There's a great book, How I Made $2 Million in the Stock Market, by a guy. His name is Darvis. The book is like 75, 80 years old. Okay, it's a classic. Now, let me tell you what's interesting about the book. And please listen to me. I'm trying to teach you actually something really important here. What's interesting about the book, what's interesting about this book is that he's a ballet dancer and he's flying throughout, taking a train throughout the country, I think in the 50s or something like that. And he's trading, position trading. And he has no time to look at the market. So basically, he's always giving himself specific rules. And he was making a lot of money. And a lot of it was because he didn't have, Penny says, love that book, my first trading book. But here's the irony, and here's the interesting part of the book. This is the part of the book that nobody seems to really pay attention to, but this is the most important part of the book. The end. The end is this. He decided that he figured that if he was spending so little time on the market, and that if he retired from ballet, he could make a lot more money because he could focus on the market a lot more. And he started losing money. And that was the lesson that I took from the book. Not that trading technically is possible, but that your emotions, basically his emotions were getting here's the book. Let me get you here. It's a classic book. I mean, I'm sure a lot of you guys already read it here. I'll post you a link. How I Made Two. Oh, there it is. This book right here. This book right. This book right here. How I Made 2 million. Here's a picture of it right there. Nicholas Darvis, $2 million in the stock market. It's an old book. It's a great book. But again, everybody takes different things. Everybody takes different things from books, and that's what I took from the book. That basically his edge was, well, his edge was the fact that stocks trended well back then over time because there was no institutional traders going against them. But the biggest thing that I took away was that he was able to control his emotions because he was always busy. He was always doing something, and he was like, and he had a rhythm. So what I learned from executing all those orders was that the less psychology, the less emotions you involve in the market, like I was putting when I was executing those orders, the better. So what I was able to do for myself is I was able to put my mind to that same place when I was executing those orders. So for me, if I start getting out of whack, all I do is I remind myself of me putting in those orders for years and years. And then I say to myself, something has to pay for those losers. And that gets me completely into the zone. Now, for some of you, it may not be that easy. For some of you, it may take nearly going BK, and I'm not exaggerating. Everybody's different. Everybody's different. But for me, it was a matter of having to pay money if I didn't just follow the rules blindly. So for me, I would be punished by trying to interpret those rules, and for me, that's like a structure. I created my own structure. Everybody's different. I can't get into your head. But I'm telling you that you have to realize it. Each one of you has a very distinctive psychological problem. You either hope too much, you fear too much. Most of you are either too afraid of the market or you're too hopeful of the market, or you're bipolar. You have both. You're too fearful and you're too greedy at the same time. You got to figure out where you are first. You got to admit it to yourself. Then you have to prove it to yourself. And then you have to start working on it. Okay? It's that simple. I wish there was a magic formula that I could snap and make you guys get, but it doesn't work that way. but I'm trying to help you the best that I can, and I'm giving you real actionable things that that you could take from this. Now, with that said, I told you I'm not going to keep you too long. I got something really cool for you. I'm going to have a new announcement. I'm going to make a little update. I'm going to make a lot of you very happy because it's not going to cost some of you anything. The smart ones is what you get right after you need it, right? Right. But you got it. Those are the steps. First, admit you have a big problem. Admit it. Okay. Then, after you admit you have a big problem, right? After you admit you have a big problem, then you have to admit that you have to realize what is it? Are you afraid of the market, or are you too greedy, or is it a combination of both? Usually it's one or the other, but some of you have usually after you've done it for a few years, it's usually one or the other because you've learned your lesson one way or the other, but then you still have the other side of it. Okay. So what do you do to rewrite fear? You have to replace it with positive thoughts. And you do that, Dana, very, very slowly. It's just like post-traumatic stress disorder. Okay, all right. One of my friends is Dr. Maidenberg. Dr. Maidenberg is well, I don't know about now. He was the senior he was the senior, UCLA had an anxiety clinic, okay, going back to 1990, anxiety clinic in UCLA. Dr. Maidenberg was the head of the anxiety clinic. He was a good friend of mine. We lived almost next door to each other. I lived on Roxbury. He lived on Lindman. And we used to talk all the time. You know how you solve post-traumatic stress disorder? There's only one way, whether you charge $100 an hour or $10,000 an hour. Desensitization. Little by little, exposure therapy. That's why I always tell people, trade with one share till you have all this stuff in your head completely clear. Because you see, your emotions are going to be there no matter if you trade with one share or 1,000 shares. So might as well deal with them. That's how you do it. Realization. First, realize you have it. Then realize. It also helps to find out. Usually, a traumatic event caused them. Either a really big loss helps you. Now you take profits really quick because you had big loss, or a loss run. Usually, something caused it. You have to replace those memories. And I'm not kidding when I say post-traumatic stress disorder. Remember, I would say remember when I told you guys most of you have post-traumatic stress and you guys were laughing? Ha ha ha. No, I wasn't joking. So true, when I started, I could have, oh my God, 50 trades open. Omar, that's crazy. That's insane. Baby steps, little baby steps. One share till your win rate is 75 and your profit factor is 2.0. And by the way, I've been saying the same thing now for 3 years. The same thing. Nothing changed. It's in my Mind Traps book, the first one. It's very difficult. It's very difficult, but it's very doable. It's very difficult. 70% trades open. Oh my God. It's not a woman man thing. Women are easier to get past. Women are faster to train because women tend to listen better and they have less ego. How do we solve holding one to losers too long and then we want to close losers when profits too soon? Well, it depends, Mary. It depends. Sometimes doing that is okay. If the market's choppy, you want to hold on to losers too long and close profits soon. But if the market's trending, you don't. It's not about holding profits too long. I don't think you understand. It's not about holding profits too long and letting losers. It's about not following the rules and doing your own thing. That's what I'm talking about. Sometimes if the market's doing this, holding losers a long time and taking profits quickly is exactly what you want to do. When the market's trending, that's not what you want to do. Why do you want to do that? Because if the market's choppy, the losers will be forgiving and you're not going to get any upside. So you might as well take quick profits. That's market dependent. But again, are you making those decisions or are we making those decisions? If we're making those decisions, I promise you, we're not using emotions. We're making those decisions because of the market. But are you making those decisions because of yourself or the market? You see what I'm saying? Your decisions. Your decisions. All right. All right. Now I got something really good for you. I'm also going to do something very nice for you. And please pay attention. follow this. I got something very, very special for you guys. All right. So live class, don't exit the browser. We are overbooked, actually. We have a lot of folks who are interested in this. So please pay close attention. The profits performance are not typical. We're not going to make future earnings claims. You may lose money. Every trade expressed in this strategy is real. I'm not. I don't. I don't. I don't really need to do any hypotheticals at this point in my life. Um, since revamping the strategy a year and a half ago, I've issued 75 alerts, 60 winners, 15 losers. Win rate is 80%. The average return, winners and losers, has been 7%, which is that's pretty damn good. The average winner paying out $1,485 for every 5,000. Every example I'm going to give you in this class is based on 5,000, and I'm also going to give you a big surprise. Big, 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 big surprise. So if you're ready for a surprise, and my suggestion is read Mind Traps 1 and 2 every single day in the morning and at night before you go to bed till you have memorized it. If you guys think Jason, how often do you read Mind Traps? I'm not kidding. I'm not joking. Every single night when you wake up and your improvement and every day, see, every day. Has your trading improved since you started reading it? Let's see what Jason says. Market is closing soon. Yes, it is. Tenfold. There you go. Read Mind Traps. Little by little, it'll get inside of you. It'll get inside of you. Okay. And once it gets inside of you, there's no holding back. All right. Let's talk about this. It's in the members area of Pro Trader Dashboards, Trading Pit, Alpha Zone Pro, and Trading Zone Live. It should be there. And also, I think VIP room. I think I asked her to put it in the VIP room. All right, folks, let's do this. Let's do this. Now, there's no monkey. There will be losers. There's no monkey business here. There will be losers. There's no black box miracle system that prints out winning trades automatically. The whole purpose of this is to give you guys an edge. If you can't handle losing trades for whatever reason, you probably shouldn't be doing this with real money. As a matter of fact, I always tell people, I've never once met a person who said, I really regret starting slow. Not once in my life. But I've met about 10,000 who said the opposite. Just think about what I'm saying right now. I've never once said, I should have started faster. Not once. Never in my life have I ever heard that from a trader. Never. Never. Think about it. But how many times have I heard the opposite? Oh, 20 times a day. I could probably get 20 people to say that here. So just, people's predisposition, mind, with people's minds. Remember why you got attracted to trading. No rules, easy money, free schedule, and it's not really that way, is it? Right? That's not trading. You were lied to. You actually have to put work in. I keep telling folks this. Trading is the best thing that can happen to you, but it's the hardest easy money you'll ever make in your life. So there's people will either not believe me or they'll get past that. Okay? There's only two ways of dealing with it. Okay? All right, folks, please listen to me and pay close attention. All right? We're doing this today. It's going to be a lot of fun. Now, my name is Roger Scott, and thanks you for joining me for a very special and urgent Black Friday briefing. I'm going to make a lot of you very happy today. It takes a lot to get me to give up my precious time with Clyde and Mia, who's sleeping right here, with my family over holidays, but this is important. Right now, traders are extremely scared, and I'm sure trading feels intimidating for many of you, but there's a very straightforward mindset shift you can make to make trading this market much less stressful. And today, I'm also going to reveal a brand new expansion to one of my favorite flagship programs that's going to blow your mind. Now, before I share all of that, I'm going to make a confession. The truth is, if you've been following my work for some time, I owe you some money. More than some money, $1,085. And I'm going to offer you, anyone tuning in right now, a chance to claim it here in a few minutes, plus a lot more. But first, let me explain why I'm doing this. For years, I've been teaching a tried and true income method that you'd learn from most Wall Street professionals. It wasn't an exciting strategy. As like with most income tactics you'll hear about, we settled for small and safe winners, okay? $297 on Meta based on $5,000 investment, $444 on AMD with $5,000 investment, 274 bucks on Nvidia, $5,000 investment. Now, don't get me wrong, everybody was making money, people were happy, nobody was complaining. But thanks to a simple game-changing switch that I recently made in my highly successful income approach, we're now supercharging our results 5 to 10 times. And I'm about to make an announcement, something that I'm adding to this program that's going to make a lot of people very happy without increasing our risk. So instead of earning a couple of $100 from each position, we're now getting waves of waves after waves of big juicy cash flow like 1,250 on PEG from $5,000, $1,000 on Citibank from $5,000, over 1,000 on GILD from $5,000, Palantir $1,500, 2,000 on AT&T. And these aren't hypothetical, these are actual trade results that are in the members area. Everything you'll see today is for real alerts sent out to folks just like you in real time. There's no could have, should have, would have. I don't play that game. And I really love trading this way. As far as I know, income traders do not trade this way because they don't know how to pick good stocks. And while I've only shared the finer details of this from a top students, here's is what they have to say. Thanks for the great trade on Win. Made over 3,000 on 10 contracts. Very, very nice. I like that. Wait till you guys hear the new announcement today. You guys are going to love it. Angie, I've doubled my account in 4 weeks. Love Roger. And then there's one from Steve. Roger, thanks for DG trade yesterday. 290% profit this morning. Not only is this now possible and to make 5 to 10 times bigger returns, but we don't have to wait years or months to see it happen. When things work out, we can generate these 5 to 10 times income returns in a single day, like with JP Morgan, Amazon. Imagine you took a trade, went to sleep, woke up the next morning, made $1,766. That's the power of what I'm going to teach you today. So take some notes. Over the next few minutes, I'll tell you a full story of how I started targeting these. And I'll also cover the old school income trap that most traders fall into, costing them money and increased stress. The simple switch that you can make that can really jack up your returns. How to pick the very best stocks for your weekly cash flow. And a brand new reveal that I'll share in a bit. First time world premiere. People are going to be very excited. Plus, very important, how anyone tuning in right now can claim over $1,000 that I have right here within the next couple of hours. So, what are we waiting for? Let me tell you about the cash flow revolution. I mentioned before, my name is Roger Scott. Given my background, you might think I've seen it all by now. I've traded for over 30 years. I've traded several multi-million-dollar hedge funds. I've partnered with Kevin Hassett, who happens to be in line to take over Powell's job, which is pretty nice. And I've also worked with Curtis Faith, who happened to be one of the most successful, if not the most successful, and the youngest turtle trader from Richard Dennis's experiment. I highly recommend you check it out. So I've traded with some of the best traders in the world, and possibly the guy who's going to take over Powell's job, the head of the Fed. So I've been around the block a few times, and I'm shocked when I stumble across a new way to supercharge income methods a few years back. Gives you a shot, 5 to 10 times the reward, in the same amount of time, which is pretty nice. I like that. Let me just move this here. All right. Very, very nice. Very, very, very nice. Now, for those of you who know me, you know I'm not your typical income guy, right? You guys know that. Actually, quite the opposite. I've been able to successfully, over 31 years, let me change this, 31 years of trading, picked really good directional stocks. That's what I'm known for, right? I've made a career out of timing big moves in the market, showing my students how to take advantage of directional moves. And the results really do speak for themselves. Bob says, I've been with you for about 7 years. I've made a lot of money. I like that. That sounds really, really good. Kip wrote, my return to date is 422%. Billy took one of my trades on YouTube. You're Mr. Wonderful, bought in at 380, sold at 620. As much as I'm proud of these stories, I would never suggest that they are typical. In fact, to be perfectly honest, results like that defy the odds. The truth is, most directional option traders do lose money, and it's not necessarily because they're bad at picking the right direction. With option trades, far too often you get the right direction, but you lose money on the option. And if that's ever happened to you, don't beat yourself up. Remember, options are decaying assets, right? You need a big move in a fast amount of time. The problem is most days the majority of stocks don't make a big enough move. Now, don't take my word for it. Look at the data. This is important, right? This tells us that what you're looking at is the S&P percentage movement each and every day for the last 10 years. So you could see where the average is, like volume profile. You know how I show you volume profile, 70% of the areas right here? It's the same thing. It's just, it's a statistical thing. So that's 10 years. And you could see exactly where most of the price action occurs. You could see it right there, right there. That's the 1%. That kind of day, you need to make money on directional plays. Right, Mia? She's sleeping. But what you're looking at between those two lines is the number of days where the market moves less than 1%, about 70% of the time. As you could see, all the weight on the graph is right there in the middle. And that's because most days there's very little action in the stock market. This makes it very difficult to be directional options trader in today's markets. As a matter of fact, one study found that options traders lose money more than 80% of the time. So again, if you've ever bought an option and you were right about the direction of a stock but still lose money, do not beat yourself up. In this day and age, it's harder than ever to be a successful trader. And that's why about 18 months ago, I set out on a mission to show my traders how to overcome this obstacle. It's called Weekly Cash Flow Challenge. I taught folks a very tried and true income method that would help you increase your win rate and taking direction of the market out of the equation. That was a really, really, really big mistake. Really, really, really big mistake. Okay. All right. So that instead of losing 80% of the time, you could be winning 80% of the time or more. And it worked great. It worked beautifully. We were making money and nobody was complaining. We had a lot of success, right? And we were winning 80% of the time. And those gains were nothing to sneeze at. But I got to be honest with you, all right? And I don't know if you've ever heard this again in another trading presentation. I did not like making that money, all right? I did not. And here's why. On each trade, you'd have to tie up a ton of money for a tiny return. For example, with the tried and true method, if you wanted a shot to earn 200 to 300 per trade, you'd have to risk $5,000, okay? Right? So if the trade ever went against you, uh-oh. So I started literally losing sleep on trades where a huge amount of money was at risk in order to make a little return. Risking several thousand to make 200 to 400 just wasn't that sexy. And if anyone was going to, and remember, we were in a pretty good bull market too. So if anyone was going to risk that kind of money, I wanted them to have a little juice behind it, right? But that's where I differ from most income traders, all right? Most income traders really don't know if a stock will go higher or not. So instead of guessing where a stock will go, they guess where it won't go. They lack the confidence to bet on direction. Take a look at this chart. At a glance, you could see this stock is in an uptrend, but you could tell with strong confidence where it will go next. Will it go to A? Will it go to B? Will it go to C? Will it go to D? Will it go to E? Nobody knows. Now, most income traders would have said there's no way anyone could be right more often than not. So they came up with a clever solution to this problem. Figure out where it won't go, right? I'm not kidding. That's what most income traders do. That's what I was doing before. I was like, well, it's not going to go there, so I'll sell an option there, right? And as long as the stock holds up, it doesn't fall into the lower zone, they can generate some extra cash, typically 5-7% on the position. Now, I'm not knocking that strategy down. It works, but it's called walking up the stairs and falling down, because if you're wrong 5% of the time, which you will be, you lose everything you made on the last 19 trades. By the way, that's not an example. That's actually how it works. I'm not messing around. It has about a 5% chance of failing. It'll be right about 95% of the time. And if you take 20 trades, one out of those 20 trades statistically will fail, and you will lose money that you made on those 19 trades, right? I'm just telling you how it works, right? That's the problem with it. Eliminating those outcomes comes at a big price. You get very little money for the risk that you take. You understand? Your returns go down and your risk ends up being huge. So while technically you give yourself a very high probability of success, when you're wrong, you guys know what I'm talking about. You guys have been there before. Don't play, right? Woo, woo, I make money 90% of the time. Oh, shit, I just lost my last 15 trades. Of course you've been there before. If you haven't been there before, then you haven't seen it all, you know? So $5,000 loss when you're wrong. So losers are inevitable. High risk and little reward goes against everything that we built our career on. So I ended up tossing and turning over trades that might go against us. I did. I remember Brian calling me. He's like, "What?" We had AMD on, and I was like, "Oh, you're right. We made money on the trade, but again, I didn't like that feeling." And I'm thinking, if I'm feeling this nervous, if my hands are getting sweaty, then how are you guys are feeling? Right? Most losers just wipe out many, many wins. Yes, yes, of course, D, of course, of course. There was one trade in particular. I remember it like it was yesterday. It was an income trade on AMD. It's when the whole AI thing started kind of going south. It was about a year and a half ago, right? If we'd lose thousands, and even if we'd win, it really wasn't worth it. The money, the risk wasn't worth the risk. I realized if I'm having cold sweats about this position, I can only imagine what you guys are going through, right? I didn't like the feeling. And remember, I'm used to I mean, I feel like this all the time. So for me, these feelings are very natural. I don't get weirded out by positions going again. I don't get any of this stuff. To me, it's just a one big video game, especially when you're used to seeing big wins in my directional programs. So Roddy says, trading a small account this week, I've had one day of over 1,800% gain. Today it's over 2,000. I'm more than satisfied as a 75-year-old golfer. Very nice. Clifton said, just got out of Nano, made 92%. Look, 182, 104, 92. You're welcome, Sean. You're welcome. Reuben said, when someone gives you a present, you have to thank them for it. So, we were getting good returns. Uh, you know, and this screenshot from Dave says it all right there. More than lunch money. Thank you. You're welcome. You're welcome. Truth be told, we ended up winning money on that AMD trade. We did, making about $450 in a couple of days. But our risk was $5,000. It's a little much, right? It's a little much. $450 isn't worth losing sleep over. So I said I have to make a change. I wasn't about to put you guys through that again. I knew there had to be a better way. So I thought about all the options, did a lot of research, bounced up some ideas off Matt and Clyde. Yes, and Clyde. And finally hit me. I already had an incredible track record of picking directional moves in stocks. And folks, believe me, I got something totally new for you in a couple of minutes. A big surprise. I haven't even told Penny or Richie or Bob about this. This is good stuff. Already have an incredible track record of picking directional moves, right? So I thought about it, right? What if I could, instead of going far out of the money where the stock will not go, why don't I just treat it like a directional trade? I mean, my win rate was already 94%. So I'm like, why don't I just instead of going really far out, why don't I go really close in and take a bite out of that income, right? So that way we would have a shot at least getting paid for our risk, right? And I'll show you how it interfered with our win rate too. That'll be the funniest part. So I came up with a new technique I call cash flow accelerator. And the results speak for themselves. Remember, these are real trade alerts from before and after I used the accelerator, not some fancy back test. Before the accelerator, $256 in cash flow. After, $1,766. Now we're talking. Now we're worth risking a little money over, right? See? By the way, these are actual examples, actual trades. These are not some hypotheticals. These are actual before and after. Before the accelerator on Netflix, we risked and by the way, I would never let it go all the way to 5,000, but hypothetically, we risked 5,000 to generate $169. Not great, right? Again, your win rate is going to be 95%. After the accelerator, 1,595%. Now we're getting somewhere. Now we're talking about actual money, right? Real money. Tesla, $5,000 risk before $169. Now, $2,500 for 5,000. Match that with an 80% win rate and see what happens. Ba-boom is what we call that, okay? You don't need to tell me, and I don't need to tell you. Look at the difference. Amazon taking in $256 versus 1766. What side would you rather be on? Same risk. See? And but you're probably going to be but your win rate went down, right, Roger? Well, you'll see in a minute. The difference is crystal clear. Take a look at the numbers. Before I made the change, we had 32 trades, okay? These are actual numbers. This is not some hypothetical mumbo jumbo. We risked $249 per trade. Average winner was $399. After we've actually had probably 80 in it by now. And we're trading cheaper options, risk per trade $93, and our average target is 1485. Do you see a little difference there after I make that change? Huh? Pretty nice, right? Now, that's not even the best part. My new way of income trading gives us a shot at making 5 to 10 times the return, but we're actually outperforming it. We're actually making 11.6 times bigger returns. And my secret is simple. Now, you want to hear something crazy? Do you know what my win rate was when I was taking those big going out of the money? It was 80%. Do you know what my win rate right now is? 80%. We're making 11 point something times more money and our win rate is 11%, is 80%. It hasn't changed. Oh, I love when a plan comes together. It's all thanks to a very powerful signal that I've used for years and show you almost every day in the VIP room. All your experience writer would have thought that you would have known all this before. I did, Peter. I did. But the pub wanted me to have an income service. So I was like, okay, I'll launch a traditional income service. I'm not liking this. I did. And my secret is simple. The average return of winners and losers is over 11.6% bigger. We're actually outperforming that. Like I mentioned, we're doing really, really good. Directional moves, probably my favorite buy signal. When it triggers, a stock should move higher in a matter of days. That's right. No, this is not the secret, Greg. I've got other stuff that's a secret. This stuff I've already told you guys. Now, I hinted a moment ago. Now I'm using highly convicted directional entries, and I can twist our income trades to be slightly more aggressive, giving us a shot to make 5 to 10 times more premium, even if a stock barely moves. Let me show you what I mean. Remember earlier I showed you most income traders can't pick where a stock will go next, right? So they always pick where it's not going to go, right? And it gives you pennies return on the dollar. However, Peter, it made money. I mean, people made money. They were very happy. Nobody was complaining. I'm just letting you know that I launched it. I did some trades and I improved it. Nobody was losing money. People were very happy with the service. It was killing it. But you're right. I should have. You're right about that. You're right. It's a good point. You're right. You're actually correct. 100%. Since I know with very high confidence the stock should go higher when it hits a buy signal, I can juice up my premiums to give us much bigger bang for the buck on the income trade. Now, where we're getting paid for being in zones C, D, and E, even if the stock barely moves higher. Now, in this particular example with Dell, if only went for the premiums in zone Z, here's what we would have seen. $468, okay? In 5 days. But with the cash flow accelerator, by simply marrying it with the high conviction directional system, betting on Delta, as expected, we were able to make 5 times that. $2,000. Same risk. Not bad, right? Not bad. So how did I have such strong confidence that this stock was going to go higher? It has to do with my technical analysis abilities. They might look simple, but together they make the heartbeat of a buy signal in the market, and they make a heartbeat of this program. With these 2 lines, I don't need any guesswork, and I certainly don't need any outdated indicators. And wait till you hear the surprise that I'm throwing your way in a few minutes. That's where the good stuff comes in. All I need to see was the stock to cross these lines. Just like it did right there. With any stock crosses those lines, it's a double confirmation that the stock is starting a decisive move, which are actually very similar. What I'm showing you right now is very similar to how I use the A-line program. You guys have seen me talk about the A-line program all the time. And I can place confident bet on it, go higher in the coming days, just like you would see over and over again. Here's another example of a double confirmation on Microsoft from July. Didn't we just recently have a Microsoft trade that we closed, or Google or Oracle? I don't remember what it was. We had a really good trade recently. Now Google, it was Google. Thank you. I think we made like 60% on it. Now you probably don't remember this, but at the start of July, no one was looking at Microsoft for breakout. All right. They had just been hit by a big antitrust charge, more potential lawsuits on the horizon. Plus, on the last trading day of June, Microsoft, the Russian hack, it was a really big deal. Predictably, Microsoft was getting beaten down to the end of the month, but it didn't make a difference because the very next day we got our first confirmation, our double confirmation. As soon as I saw it, I knew I couldn't ignore it. Cash flow accelerator was in full gear. Alert my subscribers Microsoft was likely to make a massive move higher. And sure enough, Microsoft followed the exact path as expected. And with the cash flow alert, that I would have sent out on July 1st, two day move could have turned into over $1,800, which is absolutely fantastico. People love it. And that's exactly what happened. Robert, thank you for the nice profit on Microsoft. Nice way to start the 4th of July holiday. That was fun. What if someone had been twice as confident? Well, they could have made 3,700 in the bank account on 10K, which is not bad. Think about it for a second. Right now, the average mortgage in Florida is about 2,275. It's actually higher. It's about 2,400 right now. But with just one trade in 48 hours at the start of the month, anyone could have covered the entire mortgage with almost 1,500 left over. Maybe a camping getaway. I could use a camping getaway. Just no mountain lions, please. Or date night. I'll have to take Richie with his rifle, go hunting. Or date night at a nice restaurant where I'm going tonight. You know where I'm going tonight, tasting food at this Mediterranean restaurant where we want to cater for New Year's. So my wife and I are going food hunting tonight. It'll be fun. Or even just build the rainy day fund a bit. The important thing is just to have those options to begin with. And with these cash flow option setups, you don't have to wait around for the next opportunity. These are all options, Catherine, all options. We get an opportunity every single week. For example, back in November, markets were bleeding money. QQQ was taking a beating. On the same day, I spotted an opportunity, double confirmation on Palantir. That stock hasn't been doing us any favors lately, suggesting that even in a sea of red markets, the stock could shoot higher. I send out an alert. And by the way, this is not a day trading service. This average trade 4 or 5 days. You can come back. You can check the market once, twice a day. You can even enter the next day. It's not that time sensitive. Palantir moved higher as expected, and of course, every prediction won't work out perfectly. But that's why I always tell folks to never risk more than they can afford to lose. But in this case, anyone who followed this alert on November 15th could have been looking at $1,500 in the account 10 days later. All right. And we always give you exit alerts. I don't leave you hanging. And then the very next week, another double confirmation, this time on T. I got word to my longtime follower anticipating a move higher on AT&T in the coming days. And it didn't take long. T started climbing fast. Anyone who had followed along the alert that week would have been happy. And looking at a cool 2,000 in the account 1 week later. Now, keep in mind, all this started with QQQ was in a nosedive. If you invested 5,000 in QQQ shares that day, you'd be down 175 in a blink of an eye. If you bought call options, even worse, right? But if you started following my weekly cash flow setup that day, you would have made 3,500 in just a couple of weeks. With returns like that, you see why people are raving about this program? Bob bought the program some time ago, paid for it very quickly. Bob is here, actually. He was just saying how happy he is with it. Thank you, Bob. Brian, since joining the program, up $7,600. Not bad. Started with only 2,500. Very nice. Carlos, thanks for trading and the opportunity to keep cash flow going as a retiree. I can earn a living without sacrificing the perks of life from home. Very nice. As proud as I am of Bob, Brian, and Carlos, I'm already focused on the next story. We made the changes from the old school on April 19th of last year. And since then, the results have been very, very good. I mean, they've been fantastic. Now we're risking about half as much, and we're making $1,085 more. And while we're hoping for 5 to 10 times better returns, we're actually outperforming that. 11.6. All right. In fact, of the 75 trades we've published since the switch, we're 16 for 15 with an average winner paying about $1,300. And as I mentioned, we've won 19 of our last 20 trades going back to May. Here's the good news. You haven't missed out on the best strategy has to offer yet, because since we kicked off the cash flow accelerator, the markets have gotten better for this strategy. As I hinted earlier, volatility scares most traders, but for us, it gives us more money because options inflate in value with higher volatility. So it's easier to make money when volatility is near 20 than when it's near 10, driving up the premium of these assets. Now, I know this for sure. And folks, I'll answer all of your questions. Let me just finish. I need a few more minutes. I'll finish and I'll answer your question. Plus, I have a huge announcement I'm going to make. Now, I know this for sure. The market environment has never been better for this weekly cash flow strategy. That means for anyone tuning in at home right now, the cash flow revolution starts now, especially with our big new expansion that I'm about to share with you. And you can get started today as soon as you join me inside Weekly Cash Flow. There you go, Rick. Is that you, Mia? There he is. As far as I know, it's the only service dedicated to using Cashflow Accelerator and targeting 5 to 10 times bigger returns than riskier old school income methods. And we'll be targeting our next cash flow opportunity this very week. Holidays will be over on Monday. While I can never guarantee future success, we've been doing really, really well. 2,000, 1,000, 1,250, 1,500. The last one was a doozy. I want to make sure you receive your next alerts. Here's how it works. Every week, I'll look for a double confirmation, and I'll send you the income alert. It's all hedged, so it's your risk is hedged. Ticker, the entry, the target, the exit, everything you need to trade this. So you could take a look, make sure you like it, and then join the live trades. Just like some of my traders have done back in September. GILD, send out an alert. You would have taken about 2 minutes to place the trade, then do whatever you needed to do. Sheikh, if you need to leave, go, man. I'm not done yet. I still have some stuff to do. Maybe spend more time with your partner. That was me and my wife in Puerto Rico. It was fantastic. Now, because sure enough, as Monday rolls around, anyone who took the trade could have been looking at $1,041. Okay, $1,041 in profit. And if you're out and about, no problem. I'll also send each and every alert to your phone through SMS and Telegram. That way, you'll never miss a beat. All right? Never miss a beat. And you'll always have it till the end of the day to place the trade. Maybe like Pat, who crushed it. I placed the trade from my cell phone in at $1.45, out at 8.63. Very nice. Wherever you are, Weekly Cash Flow will find you. I even post a Telegram heads up that there's an alert. Next winner from September. This time, double confirmation on PEG. Everyone in my Telegram got the alert. Every member got an instant SMS message. Anyone who joined was jumping for joy a few days later. PEG flowed higher as predicted. Those that followed the alert could have claimed over $1,200 by October 1st. You could have cashed alongside us just like my student Vivek did. Results like that from cash flow completely transformed the way I approach generating income. And putting the power in your hands goes beyond just sending you alerts. I want to teach you how the sausage is made. And I'm going to have a lot of education in there for you. Brand new masterclass for all members, Cash Flow Blueprint Accelerator. I'll teach you the ins and outs of bringing the cash flow in so that you can begin targeting 5 to 10 bigger premiums on every cash flow out there. I'll teach you the same groundbreaking mindset shift that led to some of these top results. Before the accelerator, 256 on Amazon. After, 1766. Before the accelerator, me too, Bob, 169. After accelerator, 1595. Before on Tesla, 169. After 2500. With this class, you'll discover exactly what changes we made to get those kind of results. Now, take a look at everything, including the blueprint, the weekly cash flow, the Telegram alert. As it stands, I think this is the most valuable weekly cash flow service available anywhere. In my opinion, it's easily worth $1,997. In fact, it's worth a whole lot more than that. In fact, since we started using the cash flow accelerator, we've hit 8 trades that could have paid for the membership in a single week. So I think $1,997 is more than fair. But in the next 5 minutes, I'm going to double the value and cut the price in half because there's a big secret I haven't told you about yet. One that effectively doubles our opportunities, doubles our trade alerts, and doubles our chance to profit. We don't just trade bullish stocks, we trade also bearish stocks. All right. So if the market goes up or down, we've got you covered. Albemarle 1100, PEP over 2000, a firm over 2000. Now, some people say I should make these trades a separate program. All right. But I'm going to include them for free for you guys. And that's not even the announcement. I haven't made the announcement yet. Instantly doubling your chance to target cash because the opportunity they give us are just as good as trading to the upside. And that's not hypothetical. Take a look at KHC from November. The market was on fire after the election. KHC gave me a telltale sign the stock was breaking lower, clear double confirmation. Even though it seemed crazy at the time, I alerted my subscribers. Straight